Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold today. And we're going to hear from Karora Resources Management, including Paul Hewitt, he's Chairman and CEO, and Oliver Turner, Executive Vice President of Corporate Development. Now, during today's webinar, they will provide an overview and outlook. Then we will take some questions, and you can type your questions into the chat box at any time. We'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. So during this Karora webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements. They're outlined on page 3 and 4 of Karora's latest corporate presentation. That can be found on the company's website, karoraresources.com. For Red Cloud Securities, I would highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud webinar for specific disclosures on Karora Resources. So with that, I now turn it over to Paul. I'm assuming, Paul, you're going to start and update the company, update the audience on your company.
Thanks very much, David. It's great to be here with you today in Red Cloud. Oliver, it's good to see you as well. I'm happy to give an update on the company and a bit of an outlook and respond to some questions. With that, we'll just jump into the slide deck here. We'll skip through the forward-looking disclosures that David talked about. For those of you who are not familiar with Karora, Karora is a gold producer located in Western Australia. We've got a fully self-funded growth plan we've been working on for a couple of years now. We put it out in 2021. We're a very unique gold operator in the sense that we have nickel byproduct. And what I mean by that is we're located in Western Australia in a jurisdiction in Kambalda, which is one of the greatest nickel jurisdictions on the planet. In fact, I would go and some people are familiar with our Beta Hunt asset. Our Beta Hunt mine, where we're mining the gold from, was a nickel asset for almost 4 decades. So this was a nickel mine for 40 plus years that had tremendous amount of tunnels into it. And we've been able to use that infrastructure and access of the gold that we're mining at the moment. And Oliver's going to talk about some of the nickel updates and some of the nickel technical reports we've had, because we have a tremendous amount of optionality here with that nickel that we have in front of ourselves. We've got a strong, experienced team. We've been here before. We've done it. Myself, I've been mining a little over 35 years. Those of you who know my background, I was a bad hockey player in Timmins in the 80s. So I went into a mine at a very young age at 18 years old. So 35 years later, I'm here on the screen with you guys. And as a company, we're extremely proud of our efforts on ESG. And Oliver's going to talk quite a bit about our carbon neutrality, but something as a board, as a human, as an individual, we take very seriously our focus and our efforts on ESG. And before I turn it over to Oliver, I just want to talk about a recent press release that we had. 2022 was a record for the company, our best year ever, coming in at 133,000 ounces produced. That was a tremendous milestone for us, achieving guidance in a challenging year. The beginning of the year saw the borders opening up in Western Australia, which gave us a lot of challenges with absenteeism with people. There were times we were short 40% of our workforce. And as a team, we still managed to deliver our ounces. The previous year, the year before that, we were at 110 or 112,000 ounces. In 2020, I think we were just shy of 100,000 ounces. So quite a step up in the last 4 years since the acquisition of Higginsville, and more recently, the acquisition of the Lakewood Mill that we did the financing for in 2022. So we saw a tremendous step up. We were producing in that neighborhood of 25 to 28,000 ounces quarter after quarter. The last 2 quarters, you can see we've stepped up between 35 and 38,000 ounces. So a tremendous addition in that second mill, and that really mitigated one of our largest risks to our growth plan, which was the mill expansion at Higginsville, which we saw some very, very high escalating capital costs. And our biggest concern was we had put out guidance on a mill expansion at Higginsville. Our concern was the delay in timing. We're competing with a lot of labor in Western Australia. We were looking at a timeline of probably about 12 months beyond what we had told the market. So expecting to be done that mill expansion in 2023, it was now looking at something we would be done in 2024. So by buying the Lakewood mill, we've eliminated that construction project. We've eliminated that big risk that we had. And now we're focused on the underground and getting Beta Hunt up to that 2 million tons per year. With that, I'm going to turn it over to Oliver. He's going to be doing a little more. You can hear my voice. He'll be doing a little more of the talking today because I've got a little bit of a frog in my French throat, but I'm going to be along the way to answer all the questions and here with Oliver. So Oliver, over to you, young man.
Yeah, thanks, Paul, and good to see everyone on this call as well. So yeah, we'll jump right through it, and we'll go through Beta Hunt primarily. We'll spend most of our time there today, and we'll touch on Higginsville and Spargos, of course, before we wrap up for questions. So just jumping into the first topic here, we won't spend too much time on it, but something that Paul mentioned before that we are very proud of at Karora is in 2021, we were actually the world's first carbon neutral junior gold producer. And we followed that up in 2022 with replicating the exact same thing we'd done in 2021. But what we're doing in tandem with this carbon neutrality claim is we're progressing a strategy to reduce emissions across our operations. So we've worked with a group called Invert to analyze a whole range of opportunities that we have across our operations. And in 2023, we're going to set our targets on the first project that we're going to be executing on. We'll update you a little bit more about that in our 2022 ESG report, which comes out at the end of this quarter. But there's a whole range of projects that are available to us, looking at some options with fueling the fleets. There's power options. Remember, of course, that Higginsville is a remote mine site that is powered by diesel generators on site. So we're looking at a variety of options and the bigger targets in terms of how we can reduce emissions. We have to reduce absolute emissions. And then hand in hand with that, we haven't waited for emissions reductions to start on the offsetting part of our practice as well. We view these as complementary solutions, and we've been able to fund some fantastic carbon offset projects, particularly the Mount Sandy project in Australia, which is helping to reforest and rewild Australia after the bushfires of 2019. So a lot of great things you can do with these projects at the same time as working on emissions reductions projects. So something we'll continue to focus on as we move forward. From an investor standpoint, something that's very important is off the back of this in 2021, we had two major institutions that increased their shareholding significantly in Karora as a result of our climate action plan work that we've been moving forward. So it is becoming more relevant in the current investment environment and is something that's going to play a larger and larger role for all mining companies moving forward. And we're extremely happy to be leaders in the space at Karora. So as Paul mentioned, we are located in Western Australia. The very famous Kalgoorlie Belt and Kalgoorlie Camp is where we're located on the right-hand side of this page there, as you can see. The Kalgoorlie Super Pit, which is a 20 million ounce pit, part of the 60 million ounce gold mine, is about 65 kilometers north of our Beta Hunt mine and immediately adjacent to our newly acquired Lakewood mill, which we acquired towards the end of last year. And we'll certainly talk about a little bit later here. Another 70 kilometers down the road, you arrive at our Higginsville Central mill. And that's surrounded by, as you can see on this page here, shaded in a lighter green, 1,900 square kilometers of Karora tenements. And something that's quite an interesting fact, and those of you that listened to our presentations for a while now would have heard this last year, but we are actually the single largest landowner in the Kalgoorlie area, and in an area that's covering the primary shear that hosts all these major deposits. So I'll give it a shot at a drawing on the screen for you right here. But there's a shear called the Zaluka shear, which basically runs right down the middle of this page here. And let's see if this is actually going to work for me. Is it? No, it's not going to work for me. Okay, never mind.
Here, I'll help you. It's right down here. This is the Zulika shear here.
Perfect. Thank you very much. So all those deposits, those mega deposits, are hosted by the Zaluka Shear. You have the St. Ives Gold Camp, which of course Beta Hunt is a sublease on 14 million ounces. We actually go through their gates to get to our property. And Norseman to the south, which is Pantoro's operation, they're ramping up right now, 6 million ounces. And of course, millions of ounces right across the Karora property as well. So we own more land than even Goldfields, the senior gold producer that dominates this region, which is a great place to be in. So not only are we a growing gold story and nickel story, as Paul mentioned earlier on in the presentation, but we're also probably the largest landowners on prospective ground in the Kalgoorlie Belt. So very much an exploration and discovery story at the same time, which is a great place to be in. In terms of management, you've all met Paul before. Obviously, background is and last major success, of course, was at Klondex Mines, ramping that up from an orphaned asset in Nevada, bolted on a mill and several other assets, very similar to what we've accomplished here at Karora, and eventually sold that to Hecla Mining for just under $700 million. Bevan Jones on the far right there is our newest addition to the management team. He comes from across that fence I previously mentioned at Goldfields. He was a very senior operating person at Goldfields and a general manager there for 3 years, and actually took the St. Ives Gold Camp up in production, down in all-in costs, not all-in sustaining costs, and very important in the mining industry, improve their safety record at the same time. So brings with him a fantastic network and a great reputation in the region. And he stepped in for Graham Sloan, who retired last year, and of course was a driving factor in the turnaround story that Karora has been over the last 4 years. So a great compliment and the perfect person to step in as we're stepping into that growth plan and becoming a bigger operation right across the Kalgoorlie region. Rounded out the management teams, myself, background in originally mining engineering and G&P securities as a research analyst, similar to David's role at Red Cloud right now. And then Barry Dahl and Mike Doolin, our CFO and our head of technical services, two Klondex alumni as well, helped deliver that success at Klondex and have really been driving the path forward for the last several years here at Karora. The Lakewood Mill acquisition was definitely a turning point for us last year. There's been a couple of major steps forward we've made as a company. The first big one, we won't go into details because it's quite a long time ago now, but was the Higginsville Mill acquisition in 2019. The Lakewood acquisition is something that is certainly a huge step forward for Karora. And as Paul mentioned, our original plan back in 2021 was to expand that Higginsville mill. We were going to take that Higginsville mill, which you see in the center there, from 1.6 million tons per annum up to 2.5 million tons per annum. But as capital costs dramatically increased, we saw some schedule risk we're experiencing some schedule risk from the contractors, as Paul mentioned, up to 12 months. We stepped in last year and we did a $69 million bought deal. I hit a strong window in the market, but at the same time, the use of proceeds was a massive de-risking step forward and purchased that Lakewood Mill. Now, we got the keys to the Lakewood Mill in August of last year, so that did impact our third quarter production. And you saw a record third quarter production as a phenomenal quarter for us, followed by the recently announced fourth quarter, which we'll touch on in the next slide here. But what we now have is approximately 2.5 million tons per annum of combined milling capacity, about 14 to 15 months ahead of schedule from when we originally had it. So what we've managed to do over the last several months is process significant stockpiles that we've had from Beta Hunt that we never would have made it through the constrained capacity we had at 1.6 million tons per annum. But now that we have this extra capacity, we have the ability to put that through the Higginsville mill. The Lakewood mill has a number of benefits over the Higginsville mill when it comes to operating Beta Hunt material. First and foremost, it's about 20 kilometers closer to Beta Hunt than Higginsville is, so your haulage costs are lower. But then secondly, there's two gravity circuits that are at Lakewood. 100% of the gravity feed goes through those circuits at Lakewood, and we get actually about a 1% better recovery at Lakewood than we do at Higginsville. So we're averaging just over 94% there. So better recoveries, closer distance, and we're able to really optimize that Beta Hunt feed. The Higginsville mill is running very smoothly as it has for the past several years, and that expansion that we mentioned before is not off the table. We're not going to be doing it anytime soon, but years down the road, if we do find further feed, we've done the advanced engineering work to take that to 2.5 million tons per annum, so we know it is possible. So lots of future potential there as well. With respect to production, and this is basically our report card as a company, if you take a look at it, what we've managed to do since we acquired that Higginsville mill in mid-2019 is deliver consistent production results. As Paul mentioned, averaging about 25,000 ounces a quarter. You saw those all-in sustaining costs steadily track down quarter after quarter. We attacked royalties, which are a major issue across these properties. We reworked agreements with our vendors, G&A, changed over a large amount of personnel and really upgraded our productivity. In fact, one of the numbers that is most impressive, we'll talk about it when we get to the declines, but we took Beta Hunt from about 30,000 tons a month to well over 100,000 tons a month in the exact same decline, which is phenomenal. So our productivity has skyrocketed. And then along comes the first quarter of 2022. You can see it. We've labeled it with an arrow. That's what Paul mentioned at the beginning of the call. You see that spike in all-in sustaining costs. So what happened then? What happened then was that was the first time in 627 days that Western Australia opened up its borders, not only to the rest of Australia, but to the world as well. And with it came the very first wave of COVID-19 in Western Australia. Those of you that follow other miners in Western Australia would have seen a very similar increase in costs in the first quarter of 2022. We were no exception. In fact, we managed to quantify it. It was about $300 an ounce in extra attributable costs, primarily due to personnel being unavailable. Again, Paul mentioned it, but we at one point, at our low point, we had about 40% of our workforce unavailable for work. So what we did in the second quarter and then in the third quarter, a 23% reduction in the third quarter versus the first quarter of 2022. We attacked those costs again. Obviously, we're now in a much more normal state as the rest of the world is in Western Australia. So we're really proud of what the team's managed to do. And we're right back down around that 1,000, to 1,100 an ounce metric for the third quarter, which was really, really phenomenal. We have announced our fourth quarter production results, which is another very strong quarter. You see that last bar in the histogram there. That wrapped up a record year for Karora, 133.8 thousand ounces, just under the high end of our guidance, our production guidance. So very strong year wrapped at the end, despite the beginning of the year being very, very challenging. So, tip of the hat to our operations there and the great work that everybody's done down in Australia. This is our 3-year production guidance. We did put this out in mid 2021, outlining our growth plan moving forward. We are going to be refreshing our 2023 guidance here in the next several weeks to a month. So stay tuned for that. We'll be narrowing some of those estimates. And then, of course, as we ramp up over the next several years, targeting north of that 185,000 ounce a year metric is what we'll be heading towards. But we'll skip over that for now. We won't go into too much detail because we're going to be refreshing that for you in the market in the coming weeks here. And we'll certainly talk about it more at that point in time. Several projects on the go. Realistically, what we have time to focus on in this conversation is going to be Beta Hunt and some of the nickel works specifically that's going on at Beta Hunt. We'll talk about that most, and then we can take questions and everything as we finish the call. In terms of our resource base at Beta Hunt, it is a very large deposit. Something that's quite interesting. Those of you that have been investors, or at the very least followed the story since 2019. In 2019, the first resource that was slapped on, or I should say attached to Beta Hunt with respect to gold was about 400,000 ounces. We're sitting here today at just over 2 million ounces in resource at Beta Hunt. That is a huge amount of ounce additions just at Beta Hunt alone. As a company, we've added millions of ounces with Higginsville as well. Not only that, we've also added nickel resources. So you see that nickel resource table there. It's about 33,000 nickel tons, or nits as they call it in Australia. That's the first nickel resource under Karora, and at phenomenally high grades. We'll talk about that a little bit later on. But just focusing on that gold resource, it shows year after year the money that we've been able to spend. We spent about $15 to $20 million per year across the company, and about $8 to $13 million of that a year has gone into Beta Hunt, and we have been rewarded with the drill bit. And there's a number of reasons why we've been able to grow that so quickly. Just to flag an upcoming catalyst for everyone, we will be updating our resources and reserves in the coming weeks as well for the 2022 numbers. So looking forward to talking more about that as well.
Oliver.
Yep.
Just before flipping to the next slide, I just want to add one comment there. Oliver and I have been both marketing quite a bit here. We're marketing in Toronto together. One of the things that we were asked, and it's a good question, is how much nickel did Beta Hunt produce before we owned it? So Oliver was just pointing out that there's 32,000 nickel tons here already defined in resource. 32,000 nickel tons. Over 4 decades, a 40-year period, that Beta Hunt mine produced 66,000 tons of nickel. So if you can just put in your mind, over 40 years, they were mining about 66,000 nickel tons. We already have half of that already identified from a drill bit. At today's market price, that's about $1 billion of nickel in situ. Just think about that. We're a gold company, and I know I talked about, sorry about my throat. I know I talked about optionality at the beginning, but you think about an operation anywhere in the world that is a gold asset like we have, continually growing, as Oliver is pointing out, but has $1 billion of revenue of nickel already identified. And there are tremendous nickel targets south of the Gamma Fault. We were asked, how much land do we own south of the Gamma Fault? We have 2.6 kilometers south of the Gamma Fault with a drill hole that Oliver's going to talk about that's completely untested. So look, there's tremendous upside for nickel expansion, as well as the gold that we've already identified. So I think it's really important to mention the opportunity and optionality from that nickel that exists, that we'll continue to see be more and more part of our story as Karora continues to evolve. Go ahead, Oliver.
Yep. Thank you, Paul. So just to come back to that, that resource growth story, this is a very large reason why we've been able to grow the resources so quickly. So, when we took over this operation in late 2018, 2019, we inherited over 400 kilometers of existing underground infrastructure. So all of the infrastructure that you see on this isometric view there, that was already in place for the historical nickel operations that Paul just mentioned over the last 3.5, 4 decades. So that's allowed us to not only expand the gold resources, but also drill for nickel. But at the same time, and you'll see the relationship between the gold and the nickel here in a few slides here, they're located immediately adjacent to each other. So you can do the same, you can do two things from the same infrastructure, which is a tremendous benefit for us. And of course, dramatically reduces our capital development costs. So that's a huge advantage for us. The original resource was just on A zone and western flanks there and was a fraction of the size that you see on the slide today. We've since added Larkin. We're going to be adding some other new zones in our updated resource as well, which is fantastic. At the same time as extending A zone and western flanks, we actually put our press release out on Monday that talked about some of the depth extensions to both those zones, and I'll touch on that. But that's this is a perfect example of leveraging a past operating mine for future success. And we're the first company that's been able to own both the gold and the nickel rights, which is the reason why we're able to mine and discover and drill off all of this gold today that was left behind. So this is just a slide that's touching on the expansion. The second decline is on track for completion in this quarter. We're very, very close to completing that decline, which is fantastic. Following that second decline going in, and just as a reminder, we have one decline already at Beta Hunt. That's pushing just over 1 million tons per annum. If you think about the 100,000 tons per month that we've been clocking from that single decline, we are replicating what we've been doing already. We looked at 3 different ways to expand this operation. We looked at the second decline. We looked at adding a conveyor. We looked at adding a shaft. But when the proof was in the pudding in terms of what we achieved in 2019 and 2020 from a productivity standpoint. And we are very confident that we're going to be able to replicate that with the second decline. So here we are today at a very exciting point of that second decline, very close to breakthrough, which is fantastic. We'll be announcing that shortly and be providing a development update at the same time. Following that, we need to add ventilation. That is really the limiting factor in terms of getting more personnel and equipment underground. We have 3 ventilation raises that we're going to be working on. The first one's already well underway. We've started that in tandem with the decline going down. In the third quarter, we can expect for that those ventilation raises to be completed. We'll be switching on some of our fans then as well. So towards the fourth quarter is when you'll start to be able to really ramp up that additional personnel and equipment for the additional stope development. We mine anywhere between 3 to 4 stopes a quarter. These are very, very large stopes at Beta Hunt, but we need to get some more development in place in order to bring an additional, call it 2 to 3 stopes online in order to reach those production rates over the course of that ramp up that happens next year. So that's kind of the pace that you can expect things to happen, but thrilled to have that second decline on track and even a bit ahead of schedule, which has been fantastic. I should say on budget and ahead of schedule. So credit to the team that's done that as well. In fact, we attacked it from 2 separate directions, both from surface and from underground, in order to accelerate that. Just being cognizant of time here, I'm going to skip through some of these slides a little bit faster and touch on some of the things that matter a little bit more. But this is a great plan view here, and this really shows you all of the zones that we've added. If my pen was working, I'd tick them all off. But since we've come into the company, you see A zone western flanks in the top left-hand side there. That's where that original 400,000 ounce resource was. We've added approximately 9 new gold shear zones since we've been drilling out this asset, which is where all of that resource growth has come from. So it has been, a steady, methodical resource addition and resource expansion story. The Larkin was a terrific success. One of the most interesting areas for us right now from a new shear perspective is Mason, which, as you can see on this this table this plan view right here, is just located southwest and parallel to it. So we'll talk about that more in a slide or two here. Here we are, actually, the next slide. Perfect. So this is some of the recent drilling success that we've had. When I talked about western flanks and A zone being extended at depth, you see the bullet points on the left-hand side there. Western flanks put some recent drilling in there that looks like it goes another 250 meters below the current resource, 150 meters below A zone. Larkin is, if you've been following the story over the last year and a half, that's been, you're no stranger to the success that we've had there. Mason is starting to look very, very interesting, which is a parallel zone to Larkin. We announced a fantastic drill result there, which is 17 meters at 12 grams, which is phenomenal. And then we just reported the most southerly hole ever at Mason, which is now extended to 700 meters of strike extent, which is 3 meters and 9 grams. So you're starting to get the picture here. We extend these things along strike. They're open at depth. We keep adding parallel shear zones. So this mine will be going for a very significant amount of time to come, and we're quite confident we'll be continuing to find more and more of these gold shear zones, which is terrific. This is probably the best representation we have in a single cross section of showing the relationship between the gold and the nickel. On the right-hand side there, you see that 30C nickel trough sits immediately on top of that vertical gold shear zone. And that drift that cuts right through it, that's a perfect example of how we discovered these shear zones at Beta Hunt. So when we wound back that royalty that Mavericks owns, I guess now it's Triple Flag, in 2021, sorry, I should say 2020, we went through and we channel sampled that existing drift. So that underground development you see going across the page, that's been in place for north of 20 years. And once we had that royalty wound down, we channel sampled the wall, we found 14 meters of 5 grams, knew we'd found another shear, started drilling through the back, outlined what is now become the Larkin zone, which is over 1 kilometer long, just under 300,000 ounces in the resource that we put out last year. And on top of that, we found the 30C nickel trough, which has just got some phenomenal grades as well. So shows you, if you look at the scale on the bottom right-hand side, you're within about 5 to 10 meters of the shear zone. So you're using the same infrastructure for both gold and nickel. Something that's very important to note is they are not commingled. These are discrete zones. Yeah. We mine them separately, and we actually take that nickel up to surface, put it on a stockpile, and then that BHP actually buys that run-of-mine nickel ore directly from us. We'll touch on that in a couple slides here when we get into the nickel section. So here we are, the nickel resource. As Paul mentioned, 32,000 nickel tons, about half of what was historically mined in 40 years at Beta Hunt. So that's phenomenal in our first couple of years of drilling nickel here. We'll continue to attack nickel with the drill bit. The major limiting factor right now is very similar to what's happening with the production side in terms of that second decline. We need to get more drilling done in the gamma block, but we need more ventilation to get the equipment and personnel down there. So then, we'll be more weighted towards the back end of the year in terms of nickel exploration at Karora, but we've certainly got a whole bunch of nickel on our hands that we can chew through in the meantime at phenomenal grades, 2.8% when that comes out of the entrance to the mine at the end of the decline will probably be around 2.1% head grade. So phenomenal grades coming out of Beta Hunt, and something that BHP certainly wants to buy off of us. These are some of the highlights of the PEA that we put out in August of last year. A couple areas that I think are really worth highlighting. First and foremost is the capital involved. So it's going to cost us about $7 to $10 million in the first year to get this nickel operation online. Why and how is that possible? And this is to produce on a combined basis moving forward, in year, call it 3 or 4, the operation about 2,000 nickel tons a year. Why is it it's such a low cost capital operation? You probably guessed it by now. We get to use all the same infrastructure that we're using for gold for nickel. So this is probably one of the lowest cost, if the not lowest cost from a capital perspective, nickel operations on the planet. Certainly in terms of one that's located in a gold mine, these are few and far between. And that's what drives some of those phenomenal internal rates of return that you see there in the bottom right-hand side. Another interesting thing is we ran this at $19,000 and $25,000 a ton nickel. We're closer to $30,000 a ton today. A 20% in the increase in the price of nickel drives a 60% increase in project value. So it's about 3 times leveraged. We have phenomenal nickel leverage in this story. So that is going to become a more and more significant byproduct credit to Karora as we start to ramp into that nickel project. You know, byproduct credits north of $100 an ounce are certainly not out of the question, which is quite exciting. How do we process it? A lot of people asked us in marketing last year, you know, it's great you've got this nickel project, but a nickel concentrator is going to cost you a few $100 million and certainly several years to permit. Fortunately, 4 kilometers down the road, I promise that graphic is not to scale. We just wanted to show you the different sites. But 4 kilometers down the road, BHP has just restarted their Kambalda nickel concentrator. They want to take all the feed they possibly can. They're processing a lot of Mincor's feed right now. But remember, there's 2 things that we have going for us. Number one, we're obviously extremely close. Haulage costs are low. But most importantly, the grade. The grade is over 2% nickel. It's all nickel sulfides. And then, of course, you know, the beginning of the presentation, we talked about our carbon neutrality narrative. This is going to be carbon neutral nickel. So that plays another role when you start to think about BHP's offtake agreement with Tesla in terms of supplying some of their batteries. So starting to think a little bit ahead here in terms of how we plot some of our strategies. And that certainly played a role in our decision to drive that initiative forward. So just for context, you know, the prior years when we're mining remnant nickel mining, which is delivering about, you know, $35 an ounce in byproduct credits in previous years, 25 to $35 an ounce, we were trucking that 440 kilometers to BHP's Leinster operation. So it's definitely a huge distance change in terms of haulage costs. So really excited to start getting some of that material going to BHP, which will really start to kick off in 2024. With respect to expanding the nickel project, you know, I talked about it before in terms of ventilation being the limiting factor. But on the left-hand side of this diagram there, you see a plan view. In that green box there that's next to the 50C trend, it's about 1/3 of our nickel resource. And that's the Gamma Zone, which is the virgin new area that we discovered south of the Gamma Island Fault. How did we discover it and why wasn't it discovered before? Previous operators had basically mined out the entire, what you see as the Beta block. There's 2 blocks at Beta Hunt, the Beta block and the Hunt block. That's how it got its name. Those are located between the Alpha Island Fault and the Gamma Fault. When they intersected the Gamma Fault, they drilled through it and they hit nothing. They thought that was the end of the nickel mineralization. What ended up happening was that Gamma block, if you imagine that we're looking down at it on the page, shifted upwards towards surface by about 80 vertical meters. So what we did when we arrived at that Gamma Fault, we drifted through it, drilled a whole bunch of upper holes, and we hit nickel sulfides with all of those upper holes that we drilled. It was about 20 holes that we drilled, and knew we'd found the nickel, you know, the nickel resource on the other side of it. In fact, our discovery hole, the Karora discovery hole, we like to call it, was 10 meters of 11% nickel. Pretty phenomenal grades there. Now, located 1.2 kilometers down, directly along the structure from that, is a historical surface hole, which is the reason why they were so confused. They thought it didn't continue. That was 9.5 meters of 11% nickel. So it's definitely something that you know, we're tracking towards. We're about 400 meters away from it. We've got 800 meters of strike extent in our resource. And then after that, you're another 1.4 kilometers to our property boundary. Now, here's something interesting. We can't make a promise, but we certainly can't tell you it's not possible. We do not know of another major structure between the Gamma Fault and our property boundary. And all of these zones at Beta Hunt are truncated by these major regional faults. That's what stops them, basically. Since we do not have another one of these major faults mapped, we can't tell you it continues to 2.6 kilometers, but we also can't tell you that it doesn't. So certainly very, very exciting when you think about the fact that we already have half of the historically mined resource in just those 2 green boxes that you see on this page. So certainly lots of nickel growth potential to come. And we'll get in there once we get that additional ventilation in. So that'll be a late 23, 2024 story.
That's right.
So, you know, I'm gonna sort of, I want to leave some time for questions here. Don't want to cut everyone short. So we're going to skip over Higginsville and Spargos fairly quickly. But Higginsville continues to contribute to the mill at you know, at Higginsville Central. We've got Aquarius. We've got 2 boys that are contributing ounces there, which is good. This year we'll be mining a bit of the Pioneer pit as well. You know, Higginsville was a critical role player in 2019, 2020, and 2021 as we were turning this company around. We mined several pits there that really contributed a lot of feed. As Beta Hunt is continuing to grow, you know, to start doing some of the math in your head here, we're going to be taking Beta Hunt to 2 million tons per annum over the next couple of years here, right? We've proven that we could potentially even do more than that. We got 2.5 million tons of capacity, so about 500,000 tons remaining for other feed here. So really, Beta Hunt is the economic engine of this company. So Higginsville will continue to contribute on a smaller ounce basis, but what is really turning into is a very interesting exploration and highly prospective exploration property. So we'll be doing more regional exploration over the next couple of years as well. And there's certainly interesting target areas such as the Sleuth Trend, which are interesting to follow up on. What we've made a decision on as a company over the last year or so is what we get to drill at Beta Hunt, we get to turn into dollars within a year in terms of cash flowing. So it's a great return on drilling investment there. So we've really been focusing at Beta Hunt. We want to get that expanded, get that stable, continue to expand that. And of course, we'll continue to expand Higginsville at the same time. When you start to think about 1,900 square kilometers and a company of our current size's ability to do that with a $20 million budget, we are limited. So we need to allocate our dollars to where we can get the highest return on them. Could we expand that budget further with external help at some point? Certainly something that we would evaluate. There's areas there that we might not get to for 5 years, right? So can we accelerate that in certain creative ways? We're thinking about it. Let's just leave it at that. Spargos was a fantastic acquisition. As a reminder, we did that in 2020, cost us a whopping $4.5 million. We've mined just under 50,000 ounces from Spargos so far at terrific grades. It's a very high grade open pit. Spargos eventually will become an underground. We are evaluating that this year. There's some phenomenal underground drilling results that we have there. We're looking at the best plan of attack. It's delivered very well for us from an open pit perspective. And again, kind of similar to what Higginsville has played over the last several years, a critical role player in us providing feed to the mill as we've been, basically expanding the economic engine at Beta Hunt. So great tuck-in acquisition. There's more prospectivity just south of it in terms of exploration. We own a lot of property there as well. So continue to stay tuned there as well. I'm going to wrap up the presentation probably on this slide and the next slide. We did have this is comparing market caps to 200,000 ounce a year producers. You can see we're in line with some of our peers, but certainly behind others. So lots of room to grow. But if we take a look at the stock chart on the right-hand side there, I want to explain a couple things here in context for our investors, because it always helps to have context and to view things on a relative basis rather than in isolation. So we had a phenomenal run up at the end of 2021 and the beginning of 2022. I'm sure everybody here remembers that. We peaked to just over $1.2 billion, which was a great run over $7. That first quarter, of course, where the COVID-19 impacts hit Western Australia, we had a tough quarter. The first quarter we've ever missed on costs, and was certainly out of our control in terms of those COVID-19 impacts. That, of course, coincided with the general market and, of course, the gold market starting to roll over. So we were caught in that downward trend along with everybody else. But the drop certainly felt like it was was more severe than most, and that's because we'd really outperformed most of the group at that point in time. It was time for fund managers to take profits in one of the names that had actually performed for them. So we did revert from we were up at a 1.15 PNAV, which, except for one name in the space, was the highest PNAV in the group. The peers trading about 0.75 times PNAV. David can certainly tell you more about that, I'm sure. We reverted to the mean of 0.45 times, which is exactly where every other producer was in that sort of trough that you see there over the majority of 2022. And now, as we see the gold trade come back on, we've started to decouple again. We're trading up, closer to that 0.85, 0.9 times NAV. The group's at a 0.7 times NAV. So we're starting to get that valuation separation again that we saw, at the beginning of the year last year, and certainly have seen the stock perform well. So, it's been a great stock to be part of, and we've certainly got lots more value to unlock to drive that denominator up and decrease that multiple. So I'll leave it there. I do want to leave some time for questions and for David to pop on, and both Paul and I are happy to answer questions here.
Good job, Oliver.
Great. Yes. Good job, Oliver. So thank you, Paul, Oliver. Great presentation there. We'll now kick off the Q&A portion of the webinar. So reminder to everybody online, you could type your questions into the chat box. We already have a few questions here. So guys, you hit on the labor shortages and the COVID issues in Australia a little bit, largely in early 2022. Has this essentially eased in your eyes?
Has the COVID situation
Yeah, just
relax?
yeah, from a labor shortage point of view,
Yeah, so one thing I would say about Western Australia is certainly the COVID situation has relaxed. However, I would add to that answer response, David, and say that the competition in Western Australia for talented miners, engineers, geologists is still extremely steep. Senior people, all levels in our organization, doesn't matter which level in the organization, we are still competing with the iron ore, some big companies, Rio Tintos. It's a tough place to compete, given the fact that nobody had come in for 2 years. People are just starting to get visas. You're getting people in from New Zealand, South Africa, people from all over. There's just a full shortage of people. Our HR department are always on the hunt for talented people at every level in our organization. So I'd say it's still something we're going to be faced with in 2023.
Okay, so with that competition you speak about, and Bevan Jones now taking his seat as Chief Operating Officer in Australia, do you have all your senior team in place? Everybody you need there?
Yeah, so good question, David. Look, we're always looking for one or two maybe, and that's predominantly for succession planning. We're always thinking of the future, right? People, never mind attrition, we want to have bench strength in our organization for anything we do next. For our organic growth, the growth we have internally, I'd say we're staffed up. However, when we think into the future and we say, well, look, what's the next phase of the company? We need to be mindful that succession planning needs to be at the forefront of everything we do, and bringing in one or two people, key engineers, geologists, senior people, is very important for succession planning for us in our future. And we're not caught down the road without having even thought about it or put a plan in place. So, yeah.
Okay. Now, Karora has turned around these operations over the last 4 years. More recently, you really focused on ramping up production organically, but you did acquire the second mill. Would you consider further M&A activity, maybe acquisition of additional mining assets, really take the company to the next level?
Yeah, so David, I think the best way to respond to that is to just talk about what we've done. And Oliver really hammered on a very important point here. We picked up Spargos for $4.5 million. We picked up an asset. We've produced just under 50,000 ounces of it from an open pit. There is, without doubt, going to be an underground here. There is tremendous results here. We're putting together a plan here to go underground in this asset. There are some tuck-in acquisitions similar to those that will always make sense. You pick up something like $5 to $10 million and their future feed. We've got 2.5 million tons of feed now. We are ramping up Beta Hunt, as we've been talking about. We started at 30,000 tons a month. We're well over 100,000 tons a month. So on the question of would we buy anything, our focus is making sure we deliver our growth plan at this stage. We've got the second mill. Let's make sure we put this behind us and we get to that run rate that we all believe and know we can get to. But along the way, if there are some tuck-in acquisitions that are very accretive for our shareholders, we're certainly going to be looking at them aggressively.
Right. Okay. And you talked about that Lakewood Mill acquisition, really made Higginsville Mill expansion unnecessary, at least at this time. Will Lakewood essentially take over as your primary mill, since it has better recovery, shorter haulage distances? Is that the one you want to fill?
Look, in the near term, when you think about the feed, where is it coming from? Where are we getting the ore from, David? We're sitting at about 1.2 million tons today, almost 1.2 million tons per annum out of Beta Hunt. Lakewood doesn't meet all that need at the moment. Lakewood will do about 1 million tons, and that's with a little bit of work. We're going to do some work in 2023 with the second ball mill. But we'll always need that Higginsville mill. And we do get people knocking on our shoulder, hey, would you consider doing some toll milling? Oliver pointed out that we're about 14, 15 months ahead. And this is a great problem to have. Normally we'd be on a call and saying, look, the mill's delayed, this is delayed. We're saying the opposite. We're saying we've got a milling solution. We didn't do the mill expansion, but we bought a mill, and that's brought us ahead 14 to 15 months. It's a very unique and a good place to be in, whereas we're looking for, do we run some stockpiles? Do we run some toll milling? While we're getting the underground. We still got to get the underground, the ventilation raises. Oliver, he said it exactly right. Those vent raises will be done in the third quarter. One of them will be done in Q1 for sure. Ramp is going very well. So once that infrastructure is in place and we get those other stopes in the third quarter and start mining towards that fourth quarter, we'll be getting that run rate close, maybe not to 2 million in 2023, but certainly in the Q1 of 2024. But it's all coming together, and because we're ahead of schedule, we have some tremendous advantages. Look, I'd rather be ahead of schedule any day of my life than knocking on the door of shareholders saying, look, we're 9 months behind, we're a year behind, we're delaying the underground, we're delaying this because the people, the added costs, the labor, we're in a shortage of labor. We want to keep all our labor. We don't want to lay a whole bunch of people off. So it's a very unique, good opportunity for us to be in at the moment.
Okay, so with the two mills, when you get to full guidance, where do you think the bottleneck will be in a couple of years? Do you think it'll be mine production, mill capacity? Where do you think?
Yeah, look, that's a good question. Look, 2.6 million tons per annum. Beta Hunt, you can look at, we have done already. This year, we have done a number of months where we've achieved 110,000 tons per month. You pull that out, that's on its own. You're talking 1.2 to 1.4 million tons. Could we see ourselves in the future? Our goal was always to get it to 2 million tons from 360,000 tons. We're at 1.2 now. We've stretched 1.4. Could we get to 2.2 to 2.4 million tons per year? It's not out of the question. It's not something where you go, no way, that's impossible. You actually go, well, you guys were hitting some every other month. Maybe you can sustain that. And look, that's something we're going to be looking at hard at the end of this year into next year. So I'd say making sure we have that feed all the time. I wouldn't call it a bottleneck. I'd say it's an opportunity, in my opinion. There is an opportunity for us to make sure that mill's fed. We're looking at some paleo channels. There's a lot of stuff at Higginsville that's on the table that we're looking at that we need to do some detailed engineering to make sure we have in the future the feed for those mills.
Mm-hmm. So what point in the future do you consider maybe a Higginsville mill expansion? Or maybe
look, that's a good question. We get asked that all the time. I would say it's premature to answer it today, David, but I would say this. The engineering work that we did on the Higginsville expansion was certainly not a waste. If you think when we took over this company 4 years, it's been 4 years, 4 months I've been here. Higginsville was being fed by Mount Henry. We own that district of Mount Henry. We know that we need to do some work. We really needed to focus on getting the company at a sustainable rate, make sure the milling solution was done, look at the nickel, and we have tremendous faith in this nickel. This nickel is, look, to me, it's going to be a big part of our story going forward, and we'll continue to unlock value in the nickel. But if you think about where the ore was coming from in the beginning, it was all being trucked from Mount Henry to Higginsville from the previous owner. That's where they were hauling their ore. Right. Gold prices were $1,500 an ounce US at the time. Gold prices are significantly higher. So there's certainly opportunities for us to be knocking on the door of our own assets and looking, well, is it something that we want to add into the mixture in the future? And it's going to require work. Again, we were very laser-like focused on delivering the growth, making sure we get out of the situation we were in. Like 4 years ago, I was sitting on a call. We had negative $8.7 million of working capital. Today I'm saying we ended the year just shy of $70 million. We just did a record year in production, and we have tremendous nickel upside. So getting the company in a position to be sustainable and consistent was very, very critical to us, our shareholders, while maintaining safety and leading the forefront on ESG. You know, we hear about ESG all the time. I think that some of the steps we're doing as a small company are leading the way.
Right. Okay. You mentioned ramp development timing in your talk. Maybe just remind us when your ventilation is expected to be finished, and how quickly can you get throughput through that new decline?
Yeah. So again, I know that I wrote it down because Oliver did just talk about it, Dave. But it was, look, we're target Q1 for the second decline, and that's on track. I'm quite confident. The first of 3 raises. We need 3 raises to get to the bottom. And Oliver did say something that's really important. And I think sometimes it gets lost in some of the meetings we have. We evaluated 3 different alternatives. We evaluated the second ramp, put a conveyor belt in the existing ramp, sink a shaft down. We looked at all these options. And the one that made the most sense for our shareholders on timing, costs, productivity rates was that second decline. So look, again, having the mill puts a bit of pressure on us because we have the milling solution already. So we're knocking on the steps of our own underground saying, hey, when are we going to get this up and running? So we're following our plan. We're delivering it on track. Second ramp, Q1, first vent raise, Q1. The second part of the ventilation system towards Q3, like we had always planned. I'm happy that we're ahead of schedule on the first raise and the ramp that were originally scheduled for Q2 of this year. So we're ahead of schedule on those also, David.
Okay, great. Thank you. Costs, they're going to be helped by nickel byproducts credits going forward. Is there something you're giving up by selling the nickel to BHP? Are you getting credit for all the gold or other elements that might be in the concentrate? Are you losing something?
No. So on that, the 2 zones, it's a nickel sulfide, and then we have our gold shear zones, right? They are discrete zones. So the nickel sulfide is just nickel, and that's something basically we bring that run of mine ore right up to surface, and that's what BHP takes. So we get a payability. So we basically get paid on a percentage of metal content is the current contract with BHP. It's something that we work on every single year. So they pay us a percentage of the metal content. We have no processing costs or concentration costs or anything like that associated with it. We get paid 80% of the value up front. We get paid another 20% when it comes out the back end. But all of the processing side of it and the costs associated with that are BHP's.
Okay, great. And that nickel deposit, if it extends beyond the property boundary to the south of Gamma Fault, is there a potential that you can extend the property in that direction?
Yeah, look, David, the right answer for that is we've got 2.6 kilometers between Gamma and the bottom of our boundary. This is going to take us a number of years to find out how much nickel. We just crossed the fault. We put in a tunnel, as Oliver said. We flipped up our drills. We drilled a whole bunch of uppers. We had some tremendous success. We've got 2.6 kilometers here of strike. That's going to take us quite a bit of time to unlock the amount of nickel that could exist in that. And just remember, we got 26 holes. We hit some tremendous results. 1 kilometer away from that fault, a hole that was drilled in the 90s, it was 9.5%, 11.6 meters. I always reverse it. So it was a massive intercept, just 1 kilometer south. So look, we have a lot of time. We've got a lot of room to drill this thing. There could be another repeat of Beta Hunt here south of Gamma on the land that we already own. We have a big block there.
And one key thing just to drop in there as well is that is the southernmost extent of our development. So everything from that south point further is our own development. It's not the same as what we had before, where we had the benefit of all that 400 kilometers in place. So to Paul's point, it will take us several years to develop that far south, and in tandem we're going to be running a gold operation. So give us time to drill that out.
Okay. Are you drilling that out right now, or is that something that's further down the line?
No, we could drill it from surface. However, it is much cheaper to put the infrastructure in from underground and drill shorter holes into this thing. Look, we could save our shareholders a lot of money and give them the same amount of information, provided we do it in the right process. Once the ventilation is in place, we're going to extend the drift and we're going to start drilling. The holes are a fraction of the distance, and we don't need no permits for surface drilling, anything drilling on surface. We can drill from our own tunnels. We save a lot of money and get a lot of information from drilling it from underground for our shareholders.
And
look, David, you know, a geologist said this to me one time when I was at Beta Hunt, and it always stuck in my mind. This guy had worked at Beta Hunt in the 80s, the 90s. He'd been around a number of years. He said, you know, Mr. Hewitt, I never understood why the companies before you never owned the gold rights. I was here mining the nickel. I always mined the nickel forever, and I never mined the gold rights. You guys are the first group to mine both the gold and the nickel. But his point was, there hasn't been, in his knowledge, an incident that there's nickel and there's not gold below it. There hasn't been an incident. You know, we're sitting on a massive district that's been mined 40 years. We've got another district south of it that is all equally as long and as big. Oliver pointed out we have 4 paralleling shears north of Gamma Fault that all our resource exists. This thing, we've got a much bigger system. We just need to continue drilling. And again, we have both the nickel and the gold rights. We get asked at least a couple times a year, would you sell your nickel rights? Mr. Hewitt, you know, you guys are a gold company. Would you guys sell us your nickel rights? And I go, there's not a chance in hell. I think that was a mistake in the past and not something we would ever give up. We don't want to ever give up that nickel optionality because it could really, really become something very exciting in the future. Look, again, we got $1 billion of nickel sitting underneath our feet at the moment. That's pretty impressive for anybody's standards.
Right.
And just to layer one last thing on top of that, what's very interesting about gamma as well is, of course, underneath that 50C gamma zone, we actually hit 4 meters of 40 grams per ton. So
yeah.
Paul's point in terms of gold and nickel. So south of the Gamma Fault right now, you know, we're talking about nickel, the bigger nickel operation that can become. The PEA uses part of that resource, but we haven't even really begun to test the gold potential underneath that nickel. So we're going to be, you know, furthering both those initiatives once we have that ventilation in place towards the end of this year and into 2024.
Well, you know, ways to drop your gold costs are to add more nickel, but also mine higher grade gold. So is that something you'll be able to just target, you know, try to hit the gold under the gamma nickel zone, or maybe even go at depth at the Beta Hunt?
Yeah, so we've got when we drill our holes at Beta Hunt, we actually have the nice benefit. You saw the scale on that one cross-sectional Larkin. We're able to dual purpose these holes. So we drill through where we think the gold shear zone is, and we keep drilling until we get to the contact between the basalt and ultramafic. Our holes are both gold and nickel exploration holes, and more often than not, we hit both in the same hole, separated by 10 or so meters. So that's a huge advantage when it comes to higher grades. I mean, something we haven't talked about in a long time, has certainly not been the focus of this company, but coarse gold does still exist and occur at Beta Hunt, and that's what kind of put it on the map in 2018. So in the A zone, we get a lot of that coarse gold. We just said that A zone extends another 150 meters at depth, so there's certainly going to be more coarse gold occurrences as we move through this operation for sure. And then we get intercepts like 4 meters of 40 grams per ton. That's not the average grade of the deposit. So there certainly are other areas where you can get that enrichment effect that we've seen in the A zone as well.
Well, and David, to your point, listen, you think about Beta Hunt as a whole and the average grade we've been mining about 2.6 to 2.8 gram. You get Beta Hunt to 3 gram, and everything we're seeing at depth as the grade gets better. The information that we have suggests that we could see better grades. You see a 10-20% improvement in grade. You go from 2.6 to 3 gram. Man, you're running those tons through that mill. Beta Hunt on its own could be producing 170,000 ounces per annum in one asset. It's pretty rare nowadays to find an asset that's going to produce a single asset north of 150,000 ounces a year on its own, just one asset. You know, normally you'll see, well, it's a combination of 3 or 4 assets doing it. This is a single asset that has the nickel upside. Beta Hunt is one heck of a unique deposit, and I can tell you, after mining 35 years, I feel very fortunate to be part of the Beta Hunt team and Karora. So
great.
Anyway,
So we're coming up to the top of the hour. So just a couple quick questions here. Exploration, $20 million barely, scratches the surface on such a large property. How do you prioritize some of your near mine versus some more of your distal projects? And maybe if you could touch on Lake Cowan, somebody specifically is asking.
Yeah. So look, I'll start, and Oliver can come into this response as well. But our focus has always been about when I sit with the team, Oliver and everyone, I say, look, in the next 12 to 24 months, what's going to feed the mill? We've got to make sure we're drilling to feed that mill. We always want to look at stuff 5 to 7 years out. Oliver, he alluded to it by saying, look, we have a very large land position, he said. Sometimes if you can't spend all the money at drilling it, you can look at taking on some other people's money, looking at JVs on some sections of land. I want to be really clear that we're not saying we're doing that. We're looking at how do you spend more money on this massive land position. We've got the largest land position in WA. That's very, very meaningful. Tremendous prospects, tremendous upside with Lake Cowan in the Zalukish year. There are other tremendous upside exploration opportunities. At the moment, we've really prioritized that $20 million, making sure we've got feed for the next 3 to 5 years. We're going to be evaluating different options and alternatives to see if we could increase that 20 million. Because look, at the end of the day, our shareholders want a good share price. That's how they get it returned. So we create value from the drill bit. We know that. We get a lot of value from the drill bit. Oliver, you want to add to that? Did I miss something?
No, I think you've hit it right. It's about prioritizing that feed, and as we mentioned before, you can turn a drill intercept into cash within about a year at Beta Hunt if you're in the right area. So it's it's a great place to be. So that's why we focus so much, and that's why we've taken it from 400,000 to 2 million ounces in just over 3 years, which is pretty good.
Okay, that's net of depletion. That's after mining a couple to over 200,000 ounces from that deposit that we had. Look, you mine 200,000, you take it from 400 to over 2 million ounces. That's a step in the right direction.
And Lake Cowan, is that still being drilled?
So Lake Cowan is an area where we had some RAB drilling done before, followed up by RC rather. We had geophysics there. We have the right structure there. We have some historic intercepts there. Certainly a high priority target, but we've been really focused on Beta Hunt in the last bit. Will we be drilling some Higginsville targets over the course of 2023? We will. But a single hole into Lake Cowan right now. Obviously, you want to hit something good. It's great, but how long is it going to take to actually drill that out into a deposit? It takes a bit more time. So that $20, we're very strict. We want to generate cash flow. We've got $20 to spend. Where's the highest return on your dollar? We're laser focused on prioritizing that.
Well, and we've been explaining, David, how things have changed. When we were doing the Higginsville mill expansion, we knew we had at least 14, 15 months of construction. We didn't need to feed a mill at our doorstep. We knew we had more time. We were going to prioritize some Lake Cowan, some Sleuth. Other of those areas we're going to get more drilling. But as soon as the moment we pulled the trigger, raised the money, and bought that second mill, we just said, look, at the moment, these targets are fantastic. They are good targets. Don't ever underestimate them. However, we don't have that 15-month window anymore. That window has gone from 15 months to 2 days. We're going to have the keys here next month. So with that change, we needed to change our strategy shortly. Look, this is not indefinitely. We have a lot of faith in the Sleuth trend. The Lake Cowan, those are really, really good targets. But if you can put yourself in our shoes for a moment and go, yeah, look, they were going to build Higginsville, they would have had 15 months of drilling time. Now that drilling window has really collapsed itself. So not saying the targets, they're very high priority for us, but they are real, true exploration, whereas we need feed for the mill now that we have it on our doorstep. So things have shifted a bit, but in my mind, that generates more revenue for our shareholders. So
perfect. Great color there. Last question. Do you see potential of declaring a dividend in 2025?
Yeah, look, I would never say Karora would never do a dividend. That would be a huge mistake on my part. I'd say let's make sure we get 23 and 24 and understand where we're at. And we come back out down the road. It's not a question I'm prepared to answer at this moment, except for say we would never say no to a dividend. We'd always say that's going to be something we always think of versus an NCIB. We would always look at, we want to return value to our shareholders.
Okay, great. Well, thank you guys. That's the Karora story. So thank you. And my lights go out. So thank you, Paul and Oliver, for joining me today. It's been great talking to you.
Thanks a lot.
Thanks, David. Thanks, Oliver. Bye, everyone.
Thank you, everybody else, for tuning in.
Thanks to everyone who joined the call. We appreciate it.
Great. Red Cloud Securities, we will be back Thursday afternoon when Taylor sits down with Cordova Minerals. So that's January 26th, 2 p.m. Eastern. Have a great day, everyone. Thank you very much.